Welcome back, ladies and gentlemen. After the wonderful previous session that we had, have now been joined uh, with a league of industry experts and leaders who are going to be talking to us about something very, very important. So, insurance in a post COVID world, a look at how the insurance industry is likely to evolve over the next decade. Joining us as panelists is Mr. Faisal Abbasi. He's the CEO of TPL Life Assurance. Mr. Rehan Butt, the CEO of MicroEnsure. Mr. Naeem Akhtar, he's the CEO of Postal Life. Without further ado, let's welcome the gentlemen. Thank you for joining us. And my first question is going to be to Mr. Faisal Abbasi, who's the CEO of TPL Life. So, what challenges did the insurance industry see during the pandemic? Right. So I think there's still an error with your connection. While you sort that out, let me pose the same question to Mr. Rehan Bhatt. So we've seen that COVID has posed a lot of challenges for a lot of industries, and especially insurance, where uh, a lot of companies, insurance companies, pose this challenge that they never earlier, uh, you know, insured for COVID or COVID related deaths, even. So, this has been a very recent development, and I'm sure there were some challenges that you faced. What exactly were those challenges?
Yes, thanks, Anza. And first of all, I mean, thank you and CXO Global Forum for inviting me and organizing such a brilliant, these 2 days. Uh, so, I mean, look, with challenge, there is opportunity, right? So, the good thing is that, I mean, when COVID happened, and actually that was, I mean, never thought of sort of a thing. And personally, I was on the side of the business where we saw it as an opportunity. So we had set up an InsurTech several years ago when people didn't think about it. And we had all the ingredients ready to really roll. And when COVID struck the nation early last year, we were ready. And we have grown our business by more than 150% in compared to past year. So that's, I mean, for me personally, for our business as MicroEnsure, which is doing InsurTech, COVID has been an opportunity, more of an opportunity. Now, in terms of, I would like to shed some light that from perspective of overall industry. So I think the industry was a niche industry in a pre-COVID environment. It was concentrated on few products and a few customers, which are like the rich customers who can afford to buy an expensive insurance product. When COVID stuck, and there was already a lot of competition among existing players at that time, and there was little effort being done for market creation. So when COVID stuck, so people saw dwindling, income levels, and there were challenges, there was uncertainty, there was fear, and that had impact on growth of new business for the existing players, and had like they faced extra claims as well, no more than usual claims as well. However, our business is a great example of that. What we should do in an environment of pandemic. So we were already focusing
We hear
on.
about the firefighting a little later on from you. Please hold on to that thought. And meanwhile, I would like to ask Mr. Faisal Abbasi, TPL, since they have a large share in the market. So, what challenges do you think the industry faced during the pandemic?
Thank you, Anza, and thank you, CXO Global, for giving me the opportunity to speak on this very relevant topic. And Assalamu alaikum, Rehan and Naeem sir. I think in general, what our industry faced as a challenge is the adaptability, because we were kind of stuck in our own usual processes and customer dealings. So that was a jolt when this pandemic hit us. And like other financial parts of the financial sector in Pakistan, consumer related, we also need to gear up very quickly at that time to upgrade our processes, upgrade our operations, update our internal communication methods, so that customer expectation, because customers' expectation during that time was changing on a day-to-day basis, because other parts of the consumer market were adapting quickly than us. So that was the major challenge, in my opinion, at that time, that hindered our progress a bit.
Thank you for sharing that, sir. And now to the third gentleman, sir, Mr. Naeem
Again,
Akhtar.
yes, thank you, Anza, and thank you, CX Global, for giving us this opportunity to actually share our views. Um, I think last year, March, April, May, June, these were the months where everything, turned upside down. And this was when, people were thinking that it's end of the world probably, and we don't know how we're going to survive, how long we're going to live, and everything. So all the industries, especially if you look at entertainment, travel, all of them actually really actually nosedived, and together with the what you call your financial markets as well. So it was the same for the insurance companies as well. So because we all three actually on this forum are mainly we do life insurance business, and we know that it's our business sales are actually predominantly are actually done face to face. So we had that our salespeople actually could not, because of the lockdown, couldn't actually go out and see our customers. But I think from the insurance company's point of view, there wasn't the priority, like I think Faisal Sahab has actually said as well. So for the insurance companies were more that going back to the customers and giving them a reassurance that whatever the plans which they have with us, they are intact, and if there are actually claims that will be paid. So the companies which has done that part of the communication with the customers, they are the one who actually has actually done fairly well, and probably I would
Right.
say will be more prepared. Yes.
So you're telling us very well about how the insurance industry was trying to tackle some of these challenges. Now, it's very interesting that insurance generally was perceived as something that was more agent centric rather than customer centric traditionally, because it was all about the movement of the agents, and with pandemic we saw a lot of things change. Mr. Rehan, but you were telling us about some of the ways in which the insurance industry tackled these changes.
You said something brilliant, right? That historically, so I mean, I have been hearing about throughout my career in insurance that insurance is sold, never bought, right? That's the fundamental. That's the first wrong. That's where it all gets wrong, right? So if something is there is no customer desire to buy something, and you're imposing something on that, this thing doesn't have feet, right? It cannot last long. So I think. Like my two colleagues said, so COVID actually exposed the true face of the things which our industry was lacking, right? And then what happened, right? So the topic of the panel is that how is it transforming, right? Something like that. So I believe that past year and a half we have seen something which we never saw, right? Naeem Hussain said in the morning that the things which are supposed to happen 5 years from now are happening now, and I completely agree with him. I totally endorse that, and that's having impacts on insurance as well. How is it happening? So first of all, insurance is back. So insurance is back. So historically, insurance is one. So they say that insurance is the ugly ducklings of financial products, and it's true. And insurance is the only product, in my experience, which cannot sell itself historically. It always used some crutches. Bundle it with loan, bundle with deposit, bundle with an investment plan, sell through, hide in a deposit account, stuff like that. So the first thing which happened, that insurance came forward. And COVID is fear or awareness. This is a confusion so when we look at our business, so we are having, good run. So we posed ourselves the question, is it fear or it's awareness? So now after a year and a half, it's the growth is still going on. It means that it's awareness. So the first thing, in my opinion, the way industry is responding, that's an important thing. Industry is not leading it still. Is it changing dynamics from the market? The customers want more protection products. customers they don't want investment anymore. So because they want health insurance plans, right? Now, when you bring someone to the fold of insurance, you give them some knowledge, you give them some education, and then they start thinking. So a lot of my friends are asking me from the industry that if I had paid 60,000 rupees for my car insurance in 2020 and I drove it a third of what I drove it for 2019, why would I pay the same 60,000? So that's giving rise to UBI or usage-based insurances, and people are pay-as-you-go type of insurances are being demanded by the customers, and industry is responding. Now, Ali, my friend Mohammed Ali Ahmed, he said something brilliant about the new partnership model. So those are emerging now. So the unconventional players like telecom operators, wallet companies, fintech companies, ride-hailing companies, even we are partnered with a courier company. So they are coming into the field, and they are seeing this as an ecosystem is sort of developing. That's
Right.
the next thing.
Curious to know what exactly is the nature of the partnership with the courier company.
So look, so insurance, like I said, that for all the insurance industry in emerging markets, I will not isolate Pakistan. So my experience is around emerging markets. So Pakistan is actually one of the better markets compared to some of our contemporaries. So insurance industry is notorious around emerging market. People think that they will just get the money and they will not pay me the claim. So hence, insurance company needs some strong brands because insurance is unfortunately not a very powerful brand compared to some other brands. So we insurance suppliers, we are clever people, right? So we thought that why do we invest money in creating strong brands? Why don't we team up with someone who already has a strong brand? So you tell me, you're Pakistan. Do you trust more? Which brand would you trust more? A courier company, let's say TCS is our partner, or an insurance company? TCS,
Well,
right?
that
Because
yes,
when
absolutely
you
could
when
come
you
in that.
when you book a consignment, you're relaxed. You have just booked it, but when you buy an insurance policy, you are always doubting, will I get a claim when I'm no more in the world? So that's what we do. So we actually operate in a B2B2C model, right? So we do not go. So there are two ways. You said in your intro that insurance is agency driven. That's B2C. So you hire a bunch of agents, you go directly to the customer, and you sell. That's good. But when you have to tap the masses, right? When you're targeting like 80% or 70% of the middle ignored segment of the society, you cannot have 2 million agents. So you need faster access to the market, and that's where you go to the established brands like telecom operators, like all these banks and all.
Absolutely. So
One more
you've
thing. So
right.
one
Please
more
go.
point. Give me one more minute. So if you are like any other industry, right? So if you are selling Mercedes-Benz, you cannot have 10,000 people selling that. That's a product for a niche, right? But when you are selling 50cc motorcycles, you have to flood it the market. You have to have several distribution outlets and all that, and you have to keep the product simple. Same applies to insurance. So agents are a heavy touch. So we use the language of touch. So agents are heavy touch channel. We invest a lot of money in them, and they sell complex products, and those are very expensive products. Hence, their outreach is limited. When you create light touch channel, when I have to insure, let's say 5 million customers in Pakistan, I have to create very simple products and create a very light touch channel, like SMS, like robocall, like app. That's what is happening in now between 2020 and 2021.
Right, sir. You've made some very pertinent points. And Mr. Faisal Abbasi, I would like your take on some of the things that Mr. Rehan Butt said. And also the fact that, yes, we're talking about new channels here and partnerships. How do you think a big brand like TPL coped during the pandemic?
Okay, Anza, what I understood from your question is that you were trying to ask how industry responded to the post-pandemic part regarding consumer service. In my opinion, whatever the life insurance or general insurance industry could do, they did that when the pandemic hit us in 2020, early part of 2020. The cases where I know that The customers were provide relief in terms of delayed premium payments. Now the sector understand that there's a pressure on job market. People lost their jobs. So there were companies I personally know that they came forward and brought some relief to the customer base, asking them to delay their premium payments or reduce their premium payments to just to ensure the continuity of their insurance contracts. Apart from that, I also understand and know certain instances where the customers were accommodated as far as the claim requirements were concerned, because as you know that we are an insurance business and the claim requirements are there and they are stringent, and you have to submit certain documents, certain conditions physically. But I know at certain instances, especially in TPL Life, we waived off that requirement, and we actually facilitate customer to submit all those requirements digitally. Now the onus was mainly on us as the life insurance player to verify those documents instead of customer getting them verified and bringing them to us. We did that, and apart from that, and one thing happened across the industry, that was the way we communicated with our customers. Again, with the restrictions on banking channels, with the restriction on logistics movement, with the restriction on getting out there for the customer physically, we had to alter our customer communication methods. So we relied on our apps, we relied on our emails, call centers, stuff like that. The digital medium of customer communication was encouraged, and I think industry responded to that. There are lackings, there are deficiencies in our speed to market. That is there, that is given, which Rehan but also highlighted. But the intent was positive during that period, during the tackling of the issue.
Right. So, but talking about being on ground, what about the customers? Do you think that they were more comfortable speaking to people in person earlier, or do you think they were all right with shifting to Zoom or digital means of communication? Because I know that there's a big segment in society that still likes to meet people, and then that's when they develop trust. Did you end up, so sir, here's the tricky question. Did you end up selling more insurance during this time period or not?
Uh, Answering your latter part of the question, yes, we ended up selling more because of the easier processes, the customer acquisition and servicing processes we have, since we are an InsurTech and digitally oriented company. So our processes, they facilitated us in acquiring more customers during that pandemic period, especially on the digital front. As you mentioned, yes, for companies which have a very diversified customer base, it is necessary to have an hybrid model where the physical presence is also uh, required, and you can handle customer digitally. But in ShoreTech like us, we have 99% of the customer, since that those customers acquired our policy digitally, they are very digitally aware customers. They are comfortable with using Zoom and emails and app notifications and app functionalities. So that actually cut our efforts in half, and we didn't have to spend sleepless night over how to get to our customers. They were very comfortable in dealing with us. We were very comfortable. We were operative 24/7 because of our operational model. So I think it's the model the company adopts. For larger players which have a very diversified customer base, right from villages to cities, they could have followed the multiple customer communication model. But for InsurTech like us, it's a very unidirectional digital model which were in place.
Right. Thank you, sir. Moving on, I was reading a survey by S&P Global, and the title was very interesting. It says, "Down but now not out. Insurers' capital buffers are proving resilient in the face of COVID-19." Mr. Naeem Akhtar, what do you think this is accredited to?
I think this is again depending upon the insurance company's model itself. So during the pandemic, I would say it was a double whammy for many insurance companies. On one side, insurance companies they actually get the premiums, they actually invest into real estate, stock markets, or government bonds, whatever, different types of investments they have. So I mean, when the stock markets actually went down, obviously their investment part actually suffered as well. So there were actually instances with insurance companies where they had eroded their, I would say, the capital, because their return on the investment was actually also going down. So yes, this was a challenge, but again, all those challenges the companies, if they're actually prepared, they actually focus more on getting the new business. So yes, I mean, this did actually happen with actually many companies, but I think most of the companies have actually, weathered fairly in those crises by remodeling their business approach. And now 1 year down the line, we are actually seeing a good recovery actually. So we are down, but we are not out, definitely.
Great. Brilliantly answered. Mr.
Yeah.
Rehan, but I'm going to repeat again, sir. Down but not out. Insurers' capital buffers are proving resilient in the face of COVID-19. Do you
Yes, I
think,
think.
that the points that Mr. Naeem Akhtar mentioned, do you think there's something else that this is accredited to?
No, I certainly will agree with my friend. But look, I mean, I think what the article is actually pointing out that there have been double-edged losses to insurance companies. They were not the conventional business I'm talking about. So they were not selling more, and they were having more claims, and yet we didn't see many of them becoming bankrupt, right? So why is that happening? So the good news, so first is that insurance companies are heavily capitalized around the world, mostly, right? So that's the first good news. And in the context of our own Pakistan, so there's been a blessing in disguise. So our insurance companies have more capital. So in Pakistan, insurance companies the paid up capital requirements are not very high compared to some of the other countries. Okay, so for example, in Nigeria, which has similar sort of a footprint of insurance than Pakistan, so the paid up capital requirement is manifold compared to Pakistan. Yet our companies survived the COVID wave. The reason is that again that's where the blessing in disguise comes in, because we were not doing a lot of risk, we are not underwriting a lot of business. So Pakistan is heavily overcapitalized. So just to explain the concept, so when you have 1 rupee of paid up capital, that gives you entitlement as per the insurance regulator to underwrite X amount of rupees of risk, right? So let's say it's 1 to 10 ratio, right? For example, just to keep things simple, which means that your 1 rupee can keep you afloat up to 10 rupees of risk. Were we doing 10 rupees? No, you are doing 2 rupees. So when COVID stuck, things came to a standstill position for some months, or claims were rising. But yet, because we didn't have so much insurance in there, we survived. So I think that's what it is pointing out. But like Naeem said, that now it's got to go upward. So that's the best news. Yeah, I totally agree.
Thank you, sir. Mr. Faisal Abbasi, if you would like to add a little more on the question, or we can move on to the next one.
Okay, just a few pointers from me. I think the credit goes to the regulatory framework in the country, which ensures that when such pandemic or emergency situations hit us, we are able to cope with it. So kudos to SECP and their regulatory environment, which they have created for us. When the time of test came, and we passed it with flying colors as insurers, because we paid our claims in time, especially COVID-related claims. And the current regulatory regime actually ensured that all the companies, across the sector were adequately capitalized, so that any such challenges will be met in future as well. I think the role of regulator here played a very crucial part, because regulator is not here to fix a problem at a particular point in time. The regulator or the actuaries or the financial pundits of the life insurance sector is there to actually predict what happens negative in the future and then provide for it in the present. And that's actually what happened, and that's actually what saved us. So S&P was bang on saying that we actually do it very, very smartly.
Agreed. So moving on to another report by PwC this time. Uh, the crisis did expose a number of gaps and vulnerabilities, and it reinforced the need for additional technological investments. Now, what I've seen is that I couldn't agree more with this statement, while researching for the InsurTech Summit. So, if you could please identify some of these gaps and vulnerabilities, and why did you realize that there's a reinforced need for additional technology investments?
Uh, Well, I think I assume the question is asked for me.
Yes, sir. Yes, sir.
Okay. Okay. So I think again, bang on saying that we need to invest more on technology. But again, there are certain components of technology. So I would break it in three parts. One is HR, one is IT, and then one is process engineering. I think these are the three critical areas within the technology ambit that we as a sector need to look upon as far as our investment allocations, future investment allocations are concerned. These three areas need specific attention because we are lacking in all these three areas: HR, IT, and process engineering. And that will be the flavor of the future going forward when we take our investment decisions for the future growth of the industry.
Right. Thank you, sir. Mr. Naeem Akhtar, so from your perspective, what are some of the gaps and vulnerabilities?
I think what happened was that so there's a technology, for insurance company like Faisal Saab has said, like one would be the back end and the other is the front end. I think the companies were not really prepared toward the front end technology, and we were investing heavily in our back end, processes, what you call the policy administration systems and all that. But we had not thought that we need to give the access of this information to our clients, or how we can actually automate our sales process. So that thought was not there, pre-pandemic. So now the companies are actually evolving and actually putting more resources and investment into, the I would say front end and a customer experience as well, where we can actually, streamline or do the sales and in an automated way. There's a
Absolutely. So
no
before
there's
you carry on, I just have I'm just going to interrupt you for 1 second because you
Sure.
said something very interesting and talking about automating the sales
Mhm.
process. So in your answer, could you also respond to that? Because a lot of future forecasters are predicting that maybe agents will cease to exist in the future because it will directly be the company connecting with the customer. Please, sir, carry on.
Sure. I think this term about direct to customer DTC, which we actually call it, that really depends. I mean, in which market that you are. So how mature is the market? So we are part of the developing world, then you have a developed world as well, where the customers, they for everything they go online and see that which insurance I need, which product I need to buy. Uh, I believe we are still quite, I wouldn't say far, but we are actually away from that type of automated sales for insurance. There could be other sales that we could do. We can go Amazon, whatever you can actually buy, but probably not the insurance part yet. Uh, I would think, or I would say that investment into our distribution channels, investing into digitizing or automating our distributors, which are agents, and helping them to actually achieve their sales. That's where our investment in technology will actually help in the future. Not just that we actually expect our customer will come and buy their savings and insurance products online. So because it's a large market, yes, there is a segment which is tech savvy, which will actually do that, but there's I would say 80% of our population is not ready for that yet.
Right, sir. Some very
Mhm.
valid points made, Mr. Rehan. But since you initially also identified some of the vulnerabilities and gaps, uh, how about we hear more on those?
Yeah, sure. So look, so we need to understand the conventional insurance environment, right? So it's primarily driven in a face-to-face selling, right? So imagine when there are lockdowns and you cannot step out of your house and all that. So where will that model go, right? So that's where the gaps. So it's spot on. So there are gaps, and COVID has exposed those. Now, what next, right? So there is a need to do something. So what COVID has exposed, so there are two things happening, right? One is that there is a conventional business, and you are bringing disruptive technologies to carry that out, to have more sort of preparedness for next pandemic, right? Or to deal with the government, right? But the biggest, this is not the headline. The headline is something else. COVID has brought up like hundreds of millions, or in Pakistani context, tens of millions of new customers. They were never target of an insurance company. They never thought that insurance is for me. That's a huge team out there, right? There's a huge segment out there. And they need something different. They need market creating innovation, right? So there is a difference into. So right now, if I was an agent of an insurance company and I would sell you by visiting your office and giving you illustration, printing on a paper, and then you signing it, disruptive technology is that I will convert that into an app. The same product, same customer being served through an app. Lots of insurance companies are doing that. Brilliant. But the good thing is that they have started doing now. Hence, this InsurTech Summit is the bigger picture is something else, right? So the new to insurance customer, like I said that I mean when we sell 100 policies here from MicroEnsure, 25 they were never had any insurance before. So for them, it's a different ball game altogether. Having said that, so and insurance companies are responding to that. Now, I will disagree with my brother Naeem here for a minute. So the millennial impact, right? So that's what insurance companies have to wake up to. So you know that lots of Pakistanis are using, every Pakistani perhaps with a smartphone uses WhatsApp, right? They use Facebook, they use YouTube, they use mobile money, they are using apps. So why can't they use the same interface to buy insurance, right? So the difference lies in something. So let me explain you that. I have a theory. I've been giving this even before all of this. So insurance is something you buy when you are in your like post 35, right? So if you see a teenager wanting to buy an insurance, you get really scared about them, right? What's happening to them? So they should be looking for jeans and the sneakers, not like insurance policy. But when you are in 35 or onward, so you have a family, you have kids, that's where you start your brain like mine. That's where you start thinking about future, and that's where insurance comes in. The thing is that the things I mentioned about millennials or the Pakistanis, the youth buying online, those are not insurance, right? And the people who are buying it, they are millennials. So in 5 years from now, lots of millennials will become daddies and mummies, and they will be the ones in that age group. That's where they will not imagine any other way of buying insurance but an app.
Yeah. So
So
you
that's
just
how.
me an eye opener for the future as well. Now I've also started thinking along those lines. Oh my God, do I need to start investing in insurance? But thank you for
You're
pointing that
millennial,
out.
right? So
Yes, absolutely. So, no, it has definitely, and I do agree with the point that you said. As the world as I see it these days, it's no longer happening, it is happening. Now, everything that we do is on an app. So, agreed with you. In the interest of time, we would like to thank you all for your presence. And we have time for one more question. And starting with you, Mr. Faisal Abbasi, how do you see the industry evolving in the future in the light of our discussion today?
I would actually echo what just Rehan just said. Is the insurance sector has to catch up as far as their mindset when it comes to product development and process engineering, because as he mentioned, that you need to think, keeping yourself in the shoe of Gen Z customer, because they are used to different kind of customer treatment. They are used to different kind of customer acquisition models. We are not living in 80s and 90s where our fathers and grandfather used to buy insurance through an insurance agent. So I think that's where the alignment needs to get into place, and then develop a value proposition. I think we are still selling insurance as a tool to mitigate retirement risk and tool to get your child, education or marriage. I think we need to move on. The world across the globe is now moving on from the basic concept, and they're creating a value proposition. And second point is that in future we need to be an all-rounder. Uh, right now we are catering to a certain segment of the society who thinks insurance as an investment tool, and I think that needs to change, because we see the Ras of the world and Kareems of the world and other tech-based entities of the world where they don't differentiate. So when I use Kareem, I am CEO, and my colleague can also use that Kareem service for the same price. So they are offering the same proposition to me, and they're offering the same proposition to my colleague as well. So we need to be a universal when it comes to a universal entity when it comes to customer experience. Now that segment or that thinking is gone, that we'll be catering to only a particular segment of the market, and those segments have the need of child education and retirement and whatnot. We now need to deliver 360 solutions covering the needs of Gen Z, who are very smart. They're right now not thinking about their retirement. They're not thinking about their children marriage. What they're thinking about is what value am I getting out of the proposition, and what additional insurance companies have to give me in my lifestyle. I think that's where we need to hit the nail on the head and provide solution to our customer base.
Brilliantly said, sir. Mr. Naeem Akhtar, how do you future forecast the
I
industry?
would say that I think this pandemic or COVID has actually helped the whole insurance industry as a whole, because the word actually lockdown insecurity is the one where people actually sat down and thought, we had huge amount of time when there was a complete lockdown. You sitting at home and you're thinking about your future, your kids' future, what I have, what I don't have, and all these future thoughts actually comes in your mind. So that has really helped the industry overall. Uh, uh, how the insurance companies actually go about it, that really actually depends upon the segment of the market which they actually look at. So what their value proposition is for, and what type of customer. So this is where the investment will actually come into, whether we still actually invest in our distribution model, or we actually invest into our direct, to customer actually model. That will actually depend upon the segment of the market that we actually look, and then plus the product that we actually want to promote. So whether it's insurance only, like a term insurance, or we actually have more of a savings-based business. Again, as an insurance company, we as an insurance company, Postal Life Insurance, our business is mainly driven savings business, very less on insurance. So this is where we believe that we need somebody to actually explain the concept of savings to our customers. That's why we need to have that person in between to actually take their job. So again, depending upon your insurance company models, companies will actually evolve, and then they actually take up those challenges going forward.
Thank you, sir. Mr. Rehan, but because you've been saying a lot of disruptive things, I would like you to tell us what disruptive technologies do you foresee in the future? Maybe like marriage cancellation coverage, or, school fee increment coverage, something of the sort. Tell us something interesting.
So first of all, I'm not a fan of disruption. I'm a fan of market creation. So that's the first thing, right? So marriage cancellation policy, that's creating new market. There you go, right? Well done. So look, I think transformation is already happening, and my fear is that is being led by the market, not by the providers. So there's an unfulfilled demand there, and like my colleague said, that insurance companies have been sluggish and they have been forced and all that. So MicroEnsure, Bima, they are the forerunner, that they are pushing everyone out there. Can you believe 5 years ago, the industry used to call us idiots that we are doing InsurTech? Can you believe it, right? So, but the good thing is that it's transformed, right? We haven't seen future. We didn't see COVID coming in November 2019, but we can make an estimate. So my view is that the things which are already happening, so the new types of customers are coming very fast. They never had insurance before. They never thought the insurance for them, but now they are thinking about it. New types of products are coming. That's going to transform the industry. New types of distribution models are coming. Unconventional players are jumping into the insurance business. Then new types of delivery models are coming, where you are using a lot of technology-based interactions with the customers, and then new types of service models are coming. Like both of them touched that now you are so for example, now WhatsApp being used to process claims, right? And great that SECP last year validated that as well, right? So although we have been using that for since 2014, but SECP actually said that avoid getting physical documents and insist on go for picture, digital copies of the document. So all these transformative things are already happening, and that's going to create new market. And industry is responding, and in my opinion, it has to respond faster. It has to respond. It has to double the pace at which it's responding to the increased demand for insurance in the country.
Thank you very much, gentlemen, for shedding light onto this very important topic today. Your time and your comments, your knowledge economy contributions are all valuable to us, and we hope to hear more from you in the future. Please do keep watching the summit. Ladies and gentlemen, we have a very interesting session coming up now at 11:30 a.m. Pakistan Standard Time. It's going to be a face-off by Jeremy Leach. He's the founder and CEO of Inclusivity Solutions. Stay tuned and keep watching the InsurTech Summit 2021. Thank you, gentlemen. Have a lovely day.
Thank you. Thank you.